Good morning, Scott.
Good morning.
Everybody, this is Scott Green with Monument Mortgage. Scott and I have been talking about buying a home now. Is now a good time to buy a home? And we've had these conversations amongst ourselves with Terry, me, and Scott, and others. It seems I end up talking to clients, friends, even just people I meet about is now a good time to buy a home? And we've talked a lot about this and thought we'd have this conversation with all of you. And so that's what we're going to do right now. Scott, why don't you start by talking a little bit about interest rates because interest rates have been in the news quite a bit recently. What's going on with that?
I'm going to share a screen with you to go over just what rates are doing right now. And so I'm going to pop this up for you to give you an idea what interest rates have been doing. So if we just start back during COVID, interest rates were in the twos and the threes. And so we saw a big giant spike in interest rates. For example, back in November of 2022, they were at 7.08. It got as high as 7.79. And it has been dropping since. The Feds the other day, they lowered short-term interest rates, which didn't really affect our interest rates because our interest rates were already low. We expected the Feds to lower their Fed fund rate. And so right now, as of today, we're lingering around 6.08% on the interest. And so we know that interest rates are down and it's made a big difference. And so I'm going to share another screen with you, Shannon. That's important to know is what does that mean? On just a $500,000 monthly mortgage payment, back in October of 27th of 2022, interest rates are at 7.08. So if you had a $500,000 mortgage and you closed in 2022, your payment $3,663. 1 year later, the interest rates were at 7.79. And if you closed on that home, your payment, total payment on that would be $3,905.89. Finally, this is just recent, as of yesterday, September, average rate 6.08, total payment $333. So that's a difference of payment of that's a $572 difference in the payment from 1 year ago. So the biggest questions I'm getting right now is what are interest rates going to do? And everybody's asking me, is it a good time to buy right now or should I wait? Interest rates for the rest of the year are going to go what we call sideways. We're going to have lingering interest rates going up and down towards the end of the year. And then next year, we might see interest rates drop. There's a lot of factors that go into where the interest rates are going, but we think they're going sideways. We don't think they're going to dramatically go down to 5% to 4.5%. We think that's a long ways away if that happens. So right now, rates are very good and they favor the buyer.
Okay, that's really helpful. Thank you. I'll talk briefly about what we're seeing in the market. I'm using data from the Cromford Report. Cromford Report is a highly reputable local source of market data. And their data is showing that we are in a balanced market. That is overall for the greater Phoenix area. What that means is that there isn't a whole lot of leverage favoring the buyers nor the sellers. It's in the middle. The reason is our inventory has gone up some, not crazy. It's not high inventory. We are still low inventory, but also the demand is still low. A lot of that is because people are thinking, oh, I got to wait until the rates drop. So we're overall in a balanced market. But I want to give you a little perspective. We are always in a seller's market with very rare exception. The Phoenix area has not been in a balanced market since 2014, with the exception of a few weeks at the end of 2022. So being in a balanced market is great news sellers for the greater Phoenix area. How that actually translates to us working with our buyers. The days on market is a little longer. Now we're used to very short terms, very short days on market. So last year at about this time, homes would be on an average of 21 days before accepting a contract. Right now, we're at 33. Again, these are really big numbers, but still, it's longer. You have to remember from a seller's perspective, when the home sits on the market longer, that starts to discourage sellers. And so the longer in the market, that tends to give the buyer some more leverage. In terms of pricing, Right now, homes are selling at an average about 2% less than the last list price. That's even a greater reduction than last year, just by a little bit. About 16% of the homes, though, still sell over list price. Last year at this time, 21% of the homes sold at over list price. But again, I want to give you perspective. A couple years ago, when interest rates were very low, 60% of the homes sold over list price. That's what we're trying to avoid our buyers getting into that situation when interest rates go down significantly. So many buyers flood the market, and that causes many homes to go over list price. That creates a problem for buyers because, in most cases, they will need to come up with the difference between the list price and sales price with cash. This is what we're trying to avoid, which is why we're having this conversation now. Also, seller concessions are happening right now. In the month of September, 52% of the homes that closed have given seller concessions, and the average amount is $10,000. This is a great position for buyers to get in. Something else that we've seen is sellers provide some repairs. In a strong seller's market, we don't see that. So we've been real pleased. In a recent sale, besides getting a reduced price, seller concessions, we were able to negotiate that the seller do a pretty major repair on an AC. That worked out so great for our first-time home buyer. What about you? What are you seeing with some of the clients that you've been working with?
In the past couple months, we've had 2 transactions that we worked together on.
Mm-hmm.
One of your buyers at a sell price of 452,000, they received $10,300 in seller concessions,
Wow.
which is
Mm-hmm.
good. So they were able to pay their loan costs and buy down that interest rate a little bit. The
Awesome.
other one that we did, that sell price is 420,000. You guys asked for 3% of the sell price towards the buyer's loan costs. That was $11,140.
Right.
That customer says, "Hey, Scott, I'm more concerned about the interest rate. I would rather get a lower interest rate and pay a little bit of the loan cost myself for insurance." That made quite a bit of sense to me. And then finally, I had another one just closed last week, $750,000 sell price. Seller paid $10,000 towards their loan costs.
Wow.
So right now, you can negotiate the seller to pay some of your loan costs and maybe even buy down that interest rate. The first question I get from all my customers is, where are interest rates going? Are they going to be lower next year? Are they going to be lower next month? We think interest rates are going to go sideways for the rest of the year. We're going to just see little trickles up and down. We're not going to see anything dramatic. We're not going to be in the 4% next year. We're going to be in the fives, maybe the mid fives. We don't really know for sure. But if you negotiate now, if you get in the market today, in the next few weeks, next month or so before the end of the year, you'll be able to buy down your interest rate to possibly where the interest rates are going to be next year.
Mhm.
Because when the interest rates get down to 5.5, there's going to be more competition on the market. Prices will go up. There's no question. We saw it back in 2022 and 23. We're going to see it again because when demand's there, hey, sellers are going to want to get as much money as they can.
Are there any specific products that you think are working well right now? We love to work with you because you are always keeping an eye open for different loan products and programs that work for a variety of buyers.
Well, I'm going to share one with you. And this is a product we call Welcome Home Break. Now, this doesn't fit all buyers.
Mhm.
There's restrictions on it. The income cannot exceed 80,000 for the year. The maximum loan amount is 350,000. The minimum down payment is 3%. What I like about this product is if you have a customer that's downsizing, that's thinking about retiring, or just wants a smaller home with a smaller payment, they might own a home right now at $650,000. They want to buy a house maybe for 400, 450, and they want to put a large down payment down. It's a 2-1 buy down. And the way it works, let's just say the initial interest rate for the loan for a 30-year fix is 6.125. Their first year interest rate is going to be 4.125. And then their second year interest rate is going to be 5.125. And then the third year 30 interest rate is going to be 6.125. So on a $350,000 loan, there's a savings there of $7,813. It's not a gimmicky kind of program. It's legitimately true. The lender picks up those costs.
Okay.
That's just one of them that we have. Typically, most of our customers are doing what we call conventional loans.
Mhm.
We look at their credit scores. We work with them to increase their credit scores, which helps them with their interest rates. And if they have what we call mortgage insurance, they're putting less than 20% down, we can help lower the cost of that too. We
Okay.
have all the products. Every customer's different. Everybody's different. It doesn't matter if you're making $1 million a year, $300,000 a year, $100,000 a year, $80,000 a year. Everybody has something that we can help them with. That's one of many products that we have. I just wanted to highlight.
That particular project, as you mentioned, the lender is paying for that 2-1 buy down. A
Correct.
typical 2-1 buy down, we are asking the seller to contribute to those costs, correct?
Exactly.
Because when we don't need to ask the seller to contribute towards a loan cost, we can offer some seller concessions to contribute to other costs.
That's right. Make no mistake about it. Lenders are competitive. They want loans right now. And
Right.
so they're creating these programs. They want buyers to buy in. They want to do business. They want more loans. And so they're finding ways that help the customer save money.
I thought I'd mention this is on a case by case basis. That is what we do. We work with our buyers. There's so many factors that involve the sellers willing to give concessions, willing to reduce a price, willing to do repairs. It has to do with how many days has it been on market? What is the seller's motivation? What is their life situation that is causing the sale? What is the demand they're currently having on the home? Is it in an area that's highly desirable? Is the home very updated? Have a lot of repairs been done, or does it look like that there is a lot of deferred maintenance? Those are the things we're looking at when we are negotiating with the seller on behalf of our buyers. If you're wondering if you're prepared in terms of getting a loan, that's a great time to give Scott a call. That's something we've always say to our buyers is never too early to talk to Scott about loans and about being pre-qualified, because in some cases you'll say, actually, let's wait a little bit, and you'll give some direction to put them in a better position when it is to buy, whether that be in a month, 2 month, or in 4 months.
Shannon, let me bring up one thing that I can
Sure.
tell you for sure. I've been in this business for 30 years.
Yes.
Recently, I'm talking the last year, I've been watching real estate agents.
Hmm.
A lot of real estate agents want to make this sale happen, and they don't want to cause any conflict, or they want their offers to be nice and smooth, and they never ask for the loan costs. And that's the difference between Terry and you, is you ask. Because if you don't ask, you're not going to get it. And so many buyers out there in the marketplace are not getting the service that they deserve. And I've noticed you guys are not hesitant to ask for loan costs when it's appropriate. When there's a house that's been on the market for 3 days, it's fine. And there's a lot of people looking at it. There's no way you're going to get someone to pay anything.
Right.
But when there's an opportunity there, you guys take advantage of it. We want the best for the customer. It's not about us. It's about
Right.
them.
Right. And yes, we do want the best situation for our buyers. And also, when, like you mentioned, not every home is appropriate to ask for seller
Yeah.
concessions. And very often, we will ask our buyers, how bad do you want this house? And especially after you've shown a lot of houses, you start to see what's on the market, and how what their ideal is can be very rare. And so that's something we also want to consider as well. Thank you, Scott, for the very
You.
helpful information. And if anyone has questions, how can they reach you?
They can, one, you can give them my phone number, my email. They can call. Here's the thing. If they're thinking they're going to buy next year and they're thinking about it now, what we have found is when they say, I want to buy next year, and they see a house next week, they want to buy it. So, hey, get pre-qualified now. And if you don't buy until next year, that's fine. But if something pops up, you're ready to go. What payments look like, it's a lot smoother when I meet with you earlier than it is later.
Right. Okay. That's helpful. All right. We will pass on your information. And of course, any other questions, feel free to reach out to me or Terry, and we'll talk again. Have a great day.
Have a good day. Thank you, Shannon.
Thank you, Scott.